All right, guys, I have an exciting topic that I want to talk about today, and it's the stock market. Many of you guys are afraid to invest your money for your future because you're afraid of the volatility of the stock market and what's going to happen in the future. Totally get it? Let's dive into it. But first, we should probably define what the stock market is so that you fully understand what it encompasses. A stock represents a fractional ownership of a company, and then the stock market allows trading between investors of those stocks. So basically, when you own a stock, you own a little bit of that company. So over time, as the company continues to grow and increase its profits, the value of your stock will continue to grow as well, along with interest. Let's also be fair, there are a lot of different things that you can invest in. You can invest in cryptocurrency, you can invest in real estate, you can even invest in gold. There's lots of different ways and different places in which you can park your money. And don't get me wrong, we're going to talk about some of those in some of my other videos. There are a lot of different things that you can invest your money in. However, for the purposes of today's video, I want to dissect the stock market a little bit and reach into some objections and fears that people may have about it. So let me oblige you with some education. If we look at the history of the stock market, let's just look at a 100-year period. In a 100-year period, 69% of those years, the stock market has increased in value. This is looking at any single year period. So let's be fair. If you invested your money into the stock market for one single year, based on those numbers, you do stand a 31% chance of losing money. But let's build this out first. Let's say we're going to look at any 5-year rolling periods in the stock market. So if we're looking from 1972 to 1977, 98 to 2003, 2015 to 2020, whatever 5-year period that you want to look at, that number drops down to 6% experienced loss. So any 5-year period in the history of the stock market, if you invest your money for a 5-year period, you basically stand a 94% chance of your portfolio increasing in value. But let's take it even a step further. Let's take it to a 10-year period of time. The stock market has only experienced 2 times in the past 100 years where it has experienced a 10-year loss. Those losses would include the Great Depression of the 1930s and also the dot-com bubble leading into the recession of 2008. But if we take it even one more step further, if we look at a 20-year period, the stock market has never, I repeat, never experienced a 20-year loss. So basically at any point, if you had a portfolio in the stock market over a 20-year period, it has never experienced a loss. So what does all of this mean for you? Basically, to summarize, the stock market has proven in its ability to build wealth over a long period of time. In the last 100 years, if you would have invested money into the stock market, it has averaged about an 8.6% interest over that period of time, which is pretty good. So let's use a real world example for you. Let's say that you and your family sit down and you decide that you have $250 a month that you can contribute towards a retirement plan. If you're currently 30 years old and you're thinking of retiring at 60, that gives you 30 years to invest $250 a month. Your total investment would be $90,000. If you really wanted to, you could bury that money in a coffee can in your backyard, and in 30 years, it would be worth $90,000. We've just failed to account for inflation because that $90,000 is not going to spend the same in 30 years as it does currently today. I mean, think about it. Think back to 1995. $90,000 meant a lot more in 1995 than it does today in 2025. So in that event, you are actually losing money by just sitting on it and parking it and not doing anything with it. We have to do something more. So let's take that stock market average of 8.6% interest on your $90,000 over a 30-year period of time. Your $90,000 now turns into $412,000. But let's say you're working with a financial advisor that gets you even more than 8.6% interest, maybe 10, how about 12% interest? If you get with a financial advisor and you get a portfolio that's reaching you 12% interest, your $90,000 turns into $840,000 at the end of that term. My friends, this is the power of compound interest, and this is how wealth is built. Steadily, over time, patient, consistent investing over a long period of time. So here's my advice. Get with a financial advisor. Come up with a plan for how you're going to get from point A to point B with your investments and with your life goals and where you want to get to. Trust the process, don't live in fear, and stick to the plan. Invest in your future today.